it's challenging. Bad credit doesn't mean automatically that the case will be declined, but certainly can limit our options. So again, speaking with mortgage advisor who will analyze the credit file will certainly increase the chances. Again, we're talking about little blips and blobs on the credit file in terms of the missed payments, to more serious one like CCJs or defaults, or more serious like debt management or bankruptcy, insolvency, debt relief. So we just need to know exactly what has happened, when, and whether it was satisfied or not. Of course, obviously, if we've missed a phone bill 12 months ago, it looks much better than missing perhaps a loan payment last month. So we just have to see exactly what has happened. Just to let you know, because it's a kind of misconception with majority of my clients as well, that I've missed or I had a default but I've paid off in full. It doesn't mean it doesn't really count, but the adverse credit history will stay on our profile for 6 years. So when we obviously approach the lender with the initial agreement in principle or full application, the lender will do the credit check. They've got obviously in place internal credit scorecard as well, and they will analyze the data available in the last six years. So they've got different criteria. So if something has been satisfied more than 3 years ago, it's fine. But if it's more recent one, we just have to see exactly what was the amount, because the lenders have certain criteria of the maximum amount of default, of the maximum amount of CCJ, how many consecutive missed payments we faced in the past to make the application acceptable. If it's a little bit more severe, then we have to go with a more specialized lenders. And then see what we can actually do. So of course, the key is the severity and timing of issue. Buyers may need a slightly larger deposit, maybe 15, maybe 25%, or accept slightly higher interest rate. But the important message is it's still possible. But professional advice will help them to match with the right lender. Being on the top of your credit reports is quite important. Being obviously checking the credit report on that very first initial stage, even if we think absolutely everything is perfect, just to make sure. I've seen lots of cases where the wrong data was applied to the credit report, when the credit report had wrong date of birth, pooling the wrong data as well, misspelling, which is actually quite common to us. And then we couldn't generate any credit report because not having any credit is probably equally bad as having the credit cards, because the system can verify us. So we just have to see exactly what has happened, what we do. If our name is linked to electoral roll is quite important as well. So as I said, even if we have adverse credit history, sometimes we could be young, crazy, not obviously responsible. The data will stay with us for 6 years, and then it will be obviously gone. Again, some of the lenders will ask the questions, have you ever had? And then we just have to answer the question. Some of the lenders, have you ever had in the last 6 years as well? But even if there is something in the last 6 years, you need to really speak with experienced advisor, and absolutely don't limit to one lender, because every lender is different. And then we will obviously tell you exactly what needs to be done in order to get a good product. Again, you may, as I said, pay a slightly higher interest rate, but mortgage is such a long term commitment. We're not talking about 5 years or 10 years. I mean, I wish everyone will have a short mortgage. I wish obviously good luck to everyone. But generally speaking, we're talking about 20, 25 years. And when now the cost of living is actually quite high, it's 30, 35 years. Lots of things could happen. We will sell the property probably a few times in the meantime. But that initial, obviously, interest rate may be high initially. Later on, you can prove that you take reasonably your credit data, that you pay on time, everything. But what I say to clients, regardless, the rates will go up and down, up and down. What goes down goes up. What goes obviously down will go up as well, like the prices of the properties as well. So we just have to treat this with a longer perspective, and then obviously prove that we're good to go.